It's Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios. I'm Ibn Mabunda. Let's get started. The Minister of Finance, Honorable Professor Mthuli Ncube, is set to release an interim budget tomorrow, which is the 31st of August 2019. There's high expectation where that budget is concerned in light of the fiscal policy pronouncement of last year, which introduced austerity as well as the 2% tax. This may be feared by many players across industry as having a negative effect where the growth of the economy is concerned. No wonder the minister has come through to say that it's time to perhaps lift the austerity burden that has affected the production as well as the growth of the economy over the past few months. Now, we engaged an economist, Persistence Gwanyanya, to get his perspective on what we can expect from the budget. Our Equity Access team had time with him this morning at the sidelines of a particular event in the capital. Let's have a look at that particular conversation.
From China, coming as a result of there being some significant carryover stocks. So the carryover stocks also informs the consumption of tobacco by China. We have also seen an impact out of Brazil, which is one of the major suppliers of tobacco. Those factors put together, you have seen depressed pricing for our tobacco, which reflects in the performance of tobacco subsector so far. I think we have heard that farmers have raked in something like 460 million so far, which is significantly down from the previous year performance. And this is attributed to those factors I have alluded to. But your biggest worry would be what is going to be the impact of this on future production of the crop. What has played out in the pricing of tobacco, what has played out in the marketing of tobacco this year, what is its impact. Now that we have seen that our tobacco performance, revenues out of tobacco largely depends on the performance of the interbank market. We expect that the performance of the interbank market is also going to have a significant influence into the production of tobacco this year.
Has played out on the tobacco scenes, given the stats that are just coming in at day 90, where tobacco volumes are down just 1% against last year's performance. The figures are coming in at 240.7 million kilograms against last year's performance of 244 million kilograms. Notably, however, is the fact that the values are down 33% against last year's performance at $480 million. Now let's get into the stats to give you a comprehensive picture of what has actually played out in that particular field. And then of course this would be the auction figures. They're not exactly as composite as they should, but the mass sold on the auction floors stands at 35 million kilograms against 31 million kilograms. Stands at 31 million kilograms in 2019 against last year's performance of 35 million kilograms. Now the value there at $97 million in 2018, and for this year we are at $55 million, which is a 43% decline in terms of the value in that regard. The average price at $1.76 in 2019 against the prior performance of $2.74. Now this of course would be how the figures have actually come through as at day 90. Now to take you back of course to the clip where Mr. Gwanyanya gets to comment on the expectations of the budget that the Minister of Finance is set to release tomorrow. Let's have a look.
Policy that is happening, I think review of the fiscal policy that is happening, I think today or tomorrow. You need to reflect, you need the minister to be very clear about the strategy in respect of dealing with the blocked funds. Not only that, this is a drought year. And we have got farmers that want to go back into the fields. What is the impact of the SI 142 of 2019 on those farmers? What SI just did is it devalued our own currency. So when you devalue your own currency, you reduce its worthiness. So as we devalue our own currency because it is now market determined, it means that the farmers that were paid last year or this year would have their money decimated to the extent of the exchange rate. So it represents, what that means is Treasury might be faced with a situation where the farmers would need some level of assistance.
Command Agriculture?
We talked about Command Agriculture and we talked about these interventions, state interventions, and we said Command Agriculture the country should slowly withdraw itself from Command and other government interventions. But I am seeing a situation where the country may be forced to park the withdrawal for now because of the circumstances that I have just talked that are going to befall our farmers this year. So in their projections, they need to be realistic. Treasury need to be realistic to factor those issues and how they are going to impact on their budgets. How is that is happening? I think review of the fiscal policy that is happening, I think today or tomorrow. You need to
Now, fuel prices mount with petrol increasing by 4% to $7.22 per litre against last week's value at $7.19 per litre. Diesel price was $7.47 as of last week, increasing now to $7.55. Now, as there is an increase in prices across the board, sugar prices scaling 100% as inflation soars. In the same bracket, City Parking says it has increased fuel parking fees in Harare by about 250% with effect from the 1st of August. The company confirmed the increase in a circular that has been sent out to the media and other stakeholders. The notice serves to inform, this is of course according to the statement which reads, this serves to inform the motoring public that the parking tariffs in Harare CBD have been adjusted as follows. In a CBD, it's $5 per hour, then $3 for 30 minutes. The peripheral CBD has been adjusted to $3 per hour. Now, this comes in the face of runaway inflation, which came in at 97% in the month of May, as well as at 175% in the month of June. No wonder the response. ZCTU, the largest trade union, has issued a statement bemoaning a harsh macroeconomic set up in the country, a weakening exchange rate, while also calling for re-dollarization. It remains to be seen how the stories play out, as there have been rumors of the ZCTU planning mass action. Meanwhile, just beyond our borders in South Africa, Old Mutual Peter Moyo is reinstated as the chief executive of that JSE blue chip. This follows court proceeding, and this is a ruling that just came in this afternoon, and it remains to be seen what becomes of the board, as Peter Moyo has filed a lawsuit against the board of Old Mutual that they should leave because of having made such undue decisions. Well, this concludes our evening news bulletin. Up next is a look at the news in News Review. Don't go anywhere. You just welcome back, viewers. Now, just in from a post-cabinet briefing, government is engaged in discussions around the supply of 300 megawatts of power by South African organization known as the Southern African Power Supply, which is expected to address power issues that are running in the country. Now, joining me for discussion on these and other issues is investment analyst Tinashe Kadu. Tinashe, good evening and welcome to the show.
Thank you, Eben. How are you today?
Can't want to complain. You don't get better yourself.
I'm very well.
Splendid. Now let's talk about the news that we're just receiving there from the cabinet briefing, that we've got a private player who's coming in with 300 megawatts power. Would you want to shed more light where that is concerned?
I think the government is actually in negotiation with Southern Africa Power Pool, which is actually a consortium of all the power producers in Southern Africa. It's actually, it's one of its major goals is to smoothen electricity trade across borders, across boundaries. So you'd find that the Southern African Power Pool, it actually controls the grids, and it sets prices and regulates how electricity is traded across boundaries. You find that its members include us, Mozambique, South Africa, Namibia, Botswana, Zambia, there is Lesotho, and even the Republic of Eswatini. So those are the members of the Southern Africa Power Pool. But of importance there is 300 megawatts. It's actually of great significance given our production. Off peak, I think in standard time we demand something like 900 megawatts per day. Then at peak, that's when we demand about 1,600 megawatts per day. Then at 30% production, it means that we are producing something around 300 megawatts daily. So if you assume a standard time, it means that the 300 megawatts will add on to the current production, then our deficit will be a bit lower. But I think of significance that's coming out from post-cabinet briefing is that there is also another bank which has actually offered a $15 million guarantee for that importation of electricity, which I think is positive. Is positive to see private players coming on board to try to solve the electricity crisis.
I realize. Now, several developments taking place during the course of the day, but before maybe we get into those price increases that have actually characterized the day, let's talk about the tobacco volumes that are just down 1% at day 90 against last year's performance. Looks like we've got half the stats here. This is the performance at the auction floors. It excludes the contract floors right there. So according to the stats here, mass sold is down 12%, while value is down 43%. Your comment and your assessment in terms of the trend that we've seen. Are we going to reach last year's target, last year's historic peak? Are we going to surpass that? Because we've seen an upward trajectory in terms of the values in that regard.
I think we might be able, to match last year's production last year's production of about
253.
Yes, million kgs. So if you look at how the tobacco has performed, especially at the auction floors, we had a slow start. Why did we have that slow start, Eben? It was because of all those, confusions, especially in the monetary space. Farmers, they didn't know actually which currency will they be paid in. You find that traditionally tobacco, farmers used to receive their full amount in US dollars, because tobacco is actually an export crop. But what we have seen transpiring over the course of that trading period, we have seen a lot of new policy interventions from the RBZ, and payment, especially in domestic currency, actually dissuaded farmers from delivering their harvest. But as the season now goes to an end, we have seen more and more deliveries coming on board. That's why we have seen, that difference between the last year deliveries and this year's delivery actually, slowing down. Then at just 1%, we are seeing that we are closer to matching last year's production.
Okay, now tobacco is one of our largest forex earners, raking in just below $1 billion in 2018. Now, in our conversation with Percy Gwanyanya during a particular event this afternoon, he did indicate that we are in a scenario where demand from China is depressed. Same thing for Brazil. These are major consumers of our tobacco at a global scale. In Brazil, they've got stocks from last year, so their appetite for tobacco is a bit on the low side where this year is concerned. How much of an impact would that be to what Zimbabwe has produced in 2019?
What we have seen, especially in the global markets, is that if you look at the case of China last year around, if I'm not mistaken, around September, October, it actually issued a statement that it has enough stocks of tobacco, and it was actually in a surplus position. Then you find that last year Brazil had also a record production. Then Malawi, here in Africa, it also had a record output. Here in Zimbabwe, also had a record production at 252 million kgs. So you find that in terms of that supply at a global scale, I think there was that supply glut, and I think that's what actually contributed to the depressed prices at the auction floors. But also the adverse weather season, where we had low rainfall and they were a bit erratic in terms of distribution. Then we had also those adverse effects of Cyclone Idai. We have found that even the quality itself of the leaf, it's when comparable to last year's production, it didn't match that same quality of last year. That's why we are seeing a bit of depressed prices as well. So to say that Zimbabwe we might get as much as we obtained last year, I think we won't even match last year's revenue inflow because of that depressed prices as well as poor leaf quality.
And realize now, fuel prices increase, petrol increasing 4%, diesel a slightly lower margin in that regard. Then we also see an increase in the price of sugar by a good 250%, and then also we talk about other increases. I think we talked about a certain product that increased by a good 100%. How important are these stats given what we've seen play out where inflation is concerned? May inflation coming in at 97%, June coming in at 175%. Would you want to take us through that?
When you are in a hyperinflationary environment, I think you should expect increases everywhere. I should expect increases of all prices to do with all the basic commodities. But we have seen in the fuel subsector where Zera is now trying maybe to review prices on a weekly basis. But I think what's happening, especially in the energy sector, is those retailers and even importers of fuel, I think they are chasing after the US dollar to match, the interbank rate. So we have seen the currency, the local currency, depreciating constantly over the course of the week. So I think those are some of the developments that have actually induced Zera to review those prices. But at that price, I think it's still underpriced if you look at the average prices in the region. I think if you look at it, it's a fact that our fuel, we are actually one of the cheapest in the region, and we are not a producer of fuel. We rely all on imports. If you convert it in dollars using the official rate, it's less than it's less than your 80 cents, which is actually a price that is being charged to those countries that produce oil or that refine and find their oil. So I think in terms of increase in fuel prices, we should expect, a much higher increase in price. So there, I think, is trying to manage politics, and also maybe trying to manage, the appeal, to the general public. So to continue, increasing or revising that price gradually, I think that's something that we should expect maybe over the course of the period in the short to medium term.
Interesting. Is now.
But to comment, maybe officers, there is the continued increase in fuel prices. It's actually an extra cost to businesses. We have seen, yesterday during this news review, we actually discussed the issue to do with Econet, where it was, saying that increase in prices of diesel has actually affected its operations. So we are seeing that upward review of fuel prices will have actually a domino effect in all prices in the economy.
Interesting. Now let's talk about the relevance of this particular statement here by the ZCTU. Quite some strong words there. Prices are still not affordable and beyond the reach of many. Inflation is eroding all our RTG wages and salaries. The country is not yet ready for the Zim dollar. Everyone must be paid in US dollars or the equivalent of interbank rate. This, of course, is obtained from their official Twitter account. Your perspective?
First of all, it's very difficult to come out of dollarization. And I think when the government first announced that it's actually introducing a domestic currency, I think I raised that issue, that moving out of dollarization is something that is very difficult. Why is it very difficult? Psychologically, we would have been affected because we would be thinking in terms of dollars. Then also prices in the early stages, they will be matched to the movements of the US dollar. So I think it will take time for us to forget the dollar and maybe to try to think in the domestic currency. But we have seen also a bit of weaknesses, especially on the authorities' part, in terms of implementing supportive measures to buttress that de-dollarization drive. The new exchange control requirements, I think they came in a bit late. I think if the authorities had done their homework well, they should have reintroduced the local currency together with supportive measures to buttress that policy. So that lagging behind in terms of policy, that's where we are seeing, all these issues to do with wages, demands in US dollars. But it's actually, so sad to say that, yes, workers might try to demand, being paid salaries in local currency, but it's no longer possible. If you look at the new foreign currency or the new exchange control requirements, it's no longer possible, it's no longer permissible. We are actually in a local currency environment. But maybe what they might try maybe to push for is to peg their salaries to the US dollar, or to peg it to a certain foreign currency, which I think is actually, a step backwards if we are trying to de-dollarize the economy or to make the local currency a success. But businesses and everyone and every economic agent, I think, should just accept that we are now in a local currency environment, then maybe try to make pricing decisions, not in US dollar terms, but just looking at the domestic factors of production as well as the costs to produce that product.
Now tomorrow we've got an interim budget that will be issued there by the finance minister. What is your assessment of what we can expect vis-a-vis what is played out in the economy in recent months?
First of all, we had a $9 billion budget during the beginning of the year. Then you look at what has happened in terms of pricing. Inflation has eroded that budget to an equivalent of, if you apply the exchange rate in US dollar terms, it's now just maybe 1 billion. So you find that the revenues or the budget when you factor in inflation, it's no longer, making any sense. So I think what we should expect is for the finance minister to revise the spending maybe upwards to around 14 billion local money. Then I also expect the finance minister maybe to try to implement certain policies that might stimulate growth. It's a fact that we are in a stagflation, which is a rare economic phenomenon. So if you look at that stagflation, it's an issue where we have slowing economic growth, which speaks to your low output, and the ZIMRA numbers actually speaks to it. In real terms, we are seeing revenue coming down on a quarter basis. In real terms, if we apply the exchange rate, but in nominal terms, you are seeing it going up. Why it's going up? Because of high inflation. If you factor in that inflation on average on the balance, you are seeing that even the revenue in dollar terms is depressed. So I expect to see the finance minister maybe implementing policies, maybe removing the 2% tax, considering that he said during implementation that it's a short-term measure just to mop up excess liquidity. I feel that the excess liquidity in the economy is no longer there. The police actually managed to effectively mop up that excess electronic balances, and in the monetary space, I think it's tight enough for the finance minister now to remove that policy intervention. I also expect maybe policies that might force the RBZ to order banks or other players who are involved in the monetary space to reduce costs. That one, in case when transacting, I mean your bank charges, your transactional costs, and something like that, which makes your electronic balances or your electronic methods of payment more appealing to the general public rather than demanding hard cash or your notes and coins. What we are seeing the increased demand of your notes and coins is because of your 2% tax, as well as your increased transactional charges, which makes your cash more lucrative methods of transacting. So those are some of the measures that I'm expecting from the finance minister tomorrow. But also maybe a clarity or more transparency in terms of our debt stock, the level of domestic debt, also the level of foreign debt, and the steps that the government is taking to clear those debts. I also expect maybe to hear an update when the finance minister will start public auctioning of treasury bills and other government instruments. And I also expect maybe a near issuance of longer term instruments to make the financial service sector more sustainable and more lucrative.
I realize. Well, thank you, Tinashe, for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the markets in Markets Daily. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success.